I think as everyone who's taken part knows, our law practice specializes on a provincial and interprovincial basis on assisting families with kids with disabilities and special needs. We have, I think, roughly 13 things that we do for these families, and it's a pleasure that we get paid for. And people say thank you, and they send us a check. So of course, that's always very gratifying. But part of the reason for that is that we try to put money into people's pockets first. And the way that we primarily do that initially, the initial intake process, is to identify whether their child is at home and receiving a lesser amount of money, lesser than everybody else except you, and whether they're using certain disability and caregiver tax credits that they should have used, didn't use, and whether we can recapture these and put money into their pocket. And that's Crystal's job on both of these ends. I just happen to dabble in these things. Oh, good. So we're getting good questions. That's great. Thank you. That makes life easier here. Part of the problem with the webcast is that you can put a pink bunny on top of the camera here to speak to, but unless we get questions, it's hard for us to tell if anybody out there is listening, or we're just here sitting here crazy and alone. Now, obviously, I know that I've got 161 attending, but still, you know. How are you doing? How are you doing, Crystal? Can you hear me okay?
Yeah, I can hear you just fine.
Okay, good.
I'm just looking at the questions here.
Yeah, that's a good thing for you to do. That's a good idea. And if you see a good question to answer, jump in and you can answer that question. So, well, the situation is this, so that everybody has some sort of context for this. Let me show you the next slide on the slide pack, which you will receive. Now, these figures are relatively current. You can see December 2017, and they will have increased slightly, but they're essentially the same. And you can see down here, this is the, the all. This is the breakdown. This is the all. And there's 362,000 people on ODSP in the province of Ontario, which when you do the breakout on this, and you can read this better than me, you'll see that that number is approximately 1 family in 10 of all households in the province of Ontario, which is substantial. I mean, what identifiable community do you know? Italian, Muslim, Catholic? Well, maybe that's too big, but there's lots of communities in each city in Ontario that are not 1 in 10. And yet we have things like Corso Italia in Ottawa. We don't have Autism Way. Why don't we have Down Syndrome Drive? Right? But we don't. So it's an unrecognized substantial number, and it's always fascinating to me because whatever group you're dealing with, you may feel crazy and alone at home, but whatever group you belong to, church groups, sports groups, dance groups, any group you belong to, 1 family in 10 statistically, if you have any statistical size, 1 family in 10 is the parent household of a child with special needs, and a child of any age, 0 to 65 or 85. But if you then expand on that, and you consider that you're going to need someone to be the trustee of the Henson Trust that will ultimately provide for that child when you pass on, the parent, because the parents are our primary clients. If they have 1 sibling, then instead of 1 in 10, it's 1 in 5 households. Now you can see here that 46,000 people are boarders. Now this is room and board. This is the amount of money, $896, that typically an adult child over 18 living at home is automatically slotted into when they apply for ODSP. Now 46,000 is, I believe, approximately 13% of 362,000. So it's a substantial number. And of course, it's all of the kids who initially apply for ODSP when they're 18 and they're at home. So what we do on a daily basis, and the people here who have registered for, just so there's no surprise, I doubt there is, we have 465 people registered for this specific webcast. And what we find is that a higher percentage than 13% of the 465 that have registered are families with kids at home. And of course, because this is one of the main topics here, it will be even more. So you will be contacted by us, by our office. Karen will do that to further discuss or point out what I'm going to say right now, and then see if you'd like assistance. And we're always extremely transparent about this whole process. If you think you can fix this situation yourself, we're good with that. That's just not an issue. But the problem is, well, as we'll get into it, people can't, don't, and years go by, decades go by, and their child lives with them and they get $896 instead of $1169 a month, which is $271 more. And I believe, Crystal, isn't it in November that there's usually some small inflation increase in that number?
Yeah, once a year, ODSP increases by inflation. Usually it's about $10 to $20 a year. Yeah. For basic needs and also for shelter usually.
And do they?
I haven't seen the numbers.
Do they do the shelter each year, or do they alternate between shelter and supplementary?
Usually every year both of them go up slightly. It's just a matter of how much.
I see, but it's not a great deal. So, it might be what, $4 or $5 or $6, $20, something like that.
It's about $20 a year, I find.
Okay. So what this means is that 46,000 people are on ODSP living with family, typically with parents. So what Crystal does is we have a consult, we have a contingent fee. So if we're successful, there's a fee. If we're not successful, there's no fee. And we make every effort for everyone possible, but some people it's not possible, but for everyone possible to get their benefits increased from $896 to $1169. And we have a procedure, it's a standard procedure. And of course, the different ODSP offices across the province all know our letterhead. And, legal letterhead, of course, is often helpful. And Crystal and our legal administrator, Karen, who's also the administrator for this webcast. Karen, are you listening in as well?
I'm listening. I'm reading questions right now and helping answering.
Okay. So you would be dealing, largely with Karen and with Crystal. Crystal's the paralegal and Karen's legal administrator. And what they will do is they will speak with you, see how likely it is the increase will be successful. We generally apply anyway because there's lots of cases where it's a pretty tough hustle, but if you just keep your mouth shut and file the right kind of paperwork, it slides through. Because, after a certain period of time has gone by, firstly, of course, ODSP doesn't give a goddamn about your kid, right? They're not social workers. They don't care about you. They're not trying to be helpful. And they specifically don't tell you things over decades that could be helpful, that might have been helpful, right? And anybody who has a child who's on ODSP for any length of time and has any interaction with ODSP knows this is correct. So they don't want you to get the higher amount.
I find too that often they try and push parents around.
They do, yeah.
And try and make them say no for reasons like claiming rent on your income tax return, when we know that that's not true and it doesn't raise your taxable income if you charge your child rent.
Yeah.
I find myself that I school a lot of ODSP workers and accountants on that subject. Yeah. That it doesn't raise your taxable income.
Yeah, and that's obviously one of the first questions, right? I mean, if the approximately $550 a month that then has to be transferred from the child's account to your account was taxable income, and you paid tax at your rate of taxation. That's a sort of a counterproductive process. So you're quite right. None of that is declared as income, and similarly, the child can't use it on their tax return to get whatever small tenant property tax or rental credit they might have, because it's not really rental income. And of course, we have Canada Revenue memo material on this, which we provide to all the clients. Are there any good questions we should jump onto here?
There's no questions about the benefit increases, but I am seeing some about ODSP and benefits and CPP versus ODSP.
Oh, yeah.
So the answer, there's a lady, I don't know how, there's an anonymous question here. I am confused how it is decided whether a person gets CPP or ODSP.
Yeah, no, I'll touch on that separately. There's one here from Brenda. My son lives at home and is receiving a lower amount. Well, of course he is. Can we get this increased? Well, possibly. And how? Okay. Well, the process, and we want to be completely transparent about this. If you want to give this a shot yourself, well, let me just change this a little bit.
Oh, we lost him. Ken, sorry.
No, I can't hear. Can you guys hear me?
Just tell him we'll be right back.
Ken's having some technical difficulties. He's gonna try and get his mic working. He's gonna be right back. So I guess I could start explaining how the benefit increase works. It starts off by having an ODSP compliant lease drafted between the parent and the child. And we submit it to the ODSP caseworker along with a story about what the kid does every single day. And we make that request through the caseworker. Looks like Ken's not having any luck with his speaker. Oh, Ken, I think I can hear you.
There we go.
Test. Okay. Sorry about that, everyone. I don't know what happened. I was just adjusting it so you can see my smiling face a little better. So where were we? Oh, yeah. So leases. So it's not taxable income, and we send them to all of the offices in the province. Arrives on our letterhead. And what's happened first is Karen or Crystal have spoken with you, and they've gathered a story about your child. The child's abilities to shop and cook, go through the checkout at the grocery store, bring the food home. Can they put the right things into the freezer? Are they allowed to use the stove? Can they use the microwave? And to what extent can they shop and cook? And of course, in a lot of cases, what we find is that, to be honest, guys, you know that that what happens is mom and dad, of course, do the shopping. Mom and dad, of course, do the cooking. Well, you know, it's a good exercise for the child to learn to shop and cook to the extent of their ability. And it's always interesting to me, you know, how inequitable and unfair this whole situation is, because if the child is at home with you and they're fed on a gastro tube, then you're not providing the food. You're not cooking their meals, so it's not room and board. And similarly, if you have a child, and we have these circumstances in all, you know, we're thousands of cases, obviously, where the boy will only drink the meal drinks. Well, he feeds himself, so he qualifies for the higher amount. And if the child is in a fully supported living situation, well, they get the higher amount. Same care or lesser care, frankly, than you provide the child, but they get the higher institutional amount. And of course, if the child can live on their own with supports and can shop and cook, well, then they get the higher amount. It's only you that doesn't get the higher amount. So we endeavor every day, all day, to connect with families who have kids at home, the 46,000 that you see. And I regrettably have to inform you that we've only corrected about 800. So we'd like to do better. So if you would like to discuss this and see if you can improve the situation, you know, give us a ring. Crystal, do you want to toss anything in here about the benefit increases?
Well, I think it's important maybe to talk about the amounts and how much extra they receive each month.
Okay.
So after we do this work, it ends up being $273 more per month for as long as your child lives with you. And some families, we do it when the child's 18 or 20 years old, and until 40, 50, 60 years old, that equals a lot of money over time, which is very substantial to a household.
Yeah, a few years back, I made a calculation, and we calculated that we have helped families bring in over $1 million a year in additional benefits for that group some few years ago. So it all adds up. And we often find, just to digress for just a moment, the benefit increase helps to make sure that you're fully funding their RDSP, because of course there's lots of families who can't really afford that $1,500 a year to fully fund the RDSP, and that's really, really unfortunate, because you know, if you don't fully fund the $1,500 a year, you don't get the $3,500 a year grant. So that's unfortunate. And I would think possibly one family in four that has this supplementary amount. It's found money. It's non-taxed, and you know, their plan really is to have the child remain with them all of their life. And then of course there has to be a transition at some point, but hopefully that's decades from now. So I find that one family in four gives a lot of serious thought to some life insurance, some whole life and joint and last, even if it's just $100,000, to specifically fund the trust, the Hansen Trust for the child, in case that's all there is, or at least to make sure that there's some small supplementary amount. So, you know, I feel pretty good about, you know, that I think modest monthly amount, because if you put it into supplementing the RDSP, or perhaps purchasing life insurance, or you know, doing those kinds of things, in the bigger picture, it's a big thing over several decades. So I'm pretty happy about that myself. Do you want to make any more comments about that, Crystal?
No, I think that the best thing to do is to just contact us, and we'll evaluate each situation on a case-by-case basis, and just let you know what we think the chance of success is.
Okay. Let me go to the next page or pages on this PowerPoint. Let's just see what this does. This is just a slide that indicates the monthly benefit increase and what benefits are. It points out, perhaps people don't know or recall, since September 1st, 2017, the gift over rule, the gift over 12-month rule is now $10,000 over a 12-month period. Used to be 6. And the personal asset test for the child at the same time went from 5,000 to 40,000. So it's less stringent, a little more flexible. And the month before that, August 1st, 2017, the injury settlements, pain and suffering settlements, which once had the first 100,000 exempt, now are fully exempt, the pain and suffering part. If it's a motor vehicle, then the SAB, the statutory accident benefits, can also still be exempted, but they're not just automatically exempted. What this does mean, though, is that if you happen to be a family, a household where some years ago your child was injured in some accident and received a settlement and could have applied and received ODSP or was receiving it, especially if they were injured, and then lost it because of the settlement, the rules have changed. So we can quite likely get that child, reinstated or apply for ODSP, even though they have a sizable settlement for pain and suffering.
None.
So it's 7:30. There's 170 registered. We're now on to the disability tax credit. And the disability tax credit applies for a child of any age if they are markedly restricted. Let me see if I've got that on another slide here. Just a sec. No. If they are markedly restricted or take substantially longer to do something, or can't, if it's, for example, a cognitive or mental health issue, that they can't set and keep goals. And then, of course, if they have physical disabilities, walking, eating, all of those things, they would qualify for the disability tax credit. And if you qualify, the standard, the most common profile is that the parents did not use the credit, never used the credit, hadn't heard about it, or they did, and now they're 85% of the children who don't live at home. And they used it when the child was at home, but they thought the child had to reside with them. And so when the child went into supported living or perhaps independent living, they stopped using the disability credit. And now this is typically decades, 1 or 2 decades ago. This is just the most common profile, is what I'm pointing out. And so we can put this credit back into place and backfile it for 10 years. We have a 10-year window. And it's a rolling window, if that's the right metaphor. And sounded kind of comical, rolling window. But in 2019, you can go back to 2009. In 2020, it'll be 2010. So it's just a 10-year moving window. And so we're in the process. Crystal's in the process, not me. Crystal's in the process of trying to hustle up all of the files where we haven't got everything in place. And of course, in January, the 1 year is lost. So we have to do whatever interim things we can do to file paperwork and have a placeholder to try to make sure that 2009 is preserved, if that is at all possible, because it's $1,600 a year. And similarly, when we get to the caregiver credit, things have changed over the last 10 years for the caregiver credit, but 10 years ago, it reduced your taxes by $600 a year. Now it's $1,000. But we're in the process of trying to preserve that $1,600 plus $600 for 2009 by hustling up and filing whatever we can, and that's all you can do. Crystal, do you want to make any comments about that?
Just that right now I'm finding CRA is putting up a lot of barriers to being able to file these credits in the last couple months. They're sending out a lot of unnecessary paperwork that's happening twice. We'll send a letter about the transfer of the credit to CRA, and then they'll send back the exact same letter on their own letterhead for us to do again, which then creates an extra, 2 or 3 month process when they already have the information in front of them. So I'm just finding that CRA is adding a lot of unneeded paperwork at the moment.
Yeah, they're pushing back on the applications, the supplementary doctor's letters, the transferability letters. I see there's a question here from Grant and Janice, and I would be very happy to answer their question. You mentioned the amount of $11.69 for ODSP. What is the shelter amount? The shelter component is $4.96, and the supplementary benefits are the remainder. So what we do is we set the lease. Typically, the payment is about, we set what, Crystal, $550?
Yeah, we set it for $550, and I get the question all the time, well, ODSP only pays $497, why do you set it for $550? And we started off this webinar talking about inflation and how much ODSP increases on a yearly basis. And so we find if we put it at $550, then as the lease renews itself, because there's a clause inside of our leases that renew itself on a year-to-year basis, when ODSP increases their shelter, then our clients' checks also are increased because they're beyond the amount that ODSP has in their system is beyond what they're paying. So if this year they're paying $497 and next year they're paying $510, well, because you're still under the $550 amount, they're still going to pay you the $510 that now they're paying next year, just as an example. So that's why we do it a little bit more.
I see a question here from James Dunn. James, you're asking, you have 3 special needs adult kids. All 3 have qualified for ODSP. They're qualified for ODSP, okay. We just found out that for the last 2 years, we have not received the special diet. Oh, okay, I get it. And the weight allowances. Anybody who is on ODSP can also get special diet which would be gluten, dairy, or weight. And if you have certain illnesses, you can get certain supplementary amounts as well. 2 years ago, the forms were completed by the doctor. This would be dealing with these special issues. And I dropped them off at the ODSP office 2 years ago, but it was not processed. Yeah, well, that's just a good example of them just not doing stuff. I'm hoping that when you dropped it off, you had a letter, or that you have some sort of signed receipt that you dropped them off.
Or even just a photocopy of the forms.
Yeah. However, due to our extreme life and health issues, which I fully understand, I mean, people, sometimes miss phone or office appointments with us. And, it's generally speaking, because something came up and it's an important matter, and, they don't generally just blow off our appointments, Remember one mom who, she was going to drive up from Stouffville. This is a few years back, but she was going to drive up from Stouffville with her daughter. And she had a husband who was sick, who she cared for, and a neighbor across the street that she cared for, and a daughter. And the daughter was essentially quadriplegic, but she did have one arm that worked, a bit to some degree. And so she was driving up to see me on a Friday morning at 10, and she was driving up Thursday night. And I'm laughing, but it's not that funny. And she was going to stay with friends in Canada. The daughter would stay with the friends on Friday morning, and then she'd drive into town and we would meet. And the majority of my clients never see my office because the clients are all over the province, and they're proportionally wherever they live in the province. So proportionally, there's a large number in Toronto, and the clients in distant, smaller places like Kapuskasing and so on, they're always happy to do things remotely because that means they don't have to drive, Lord forbid, to Sudbury or Toronto or something as they normally do to access services. So, you know, the remote services is a godsend to my clients. But, you know, some do actually come to the office. And so anyway, I got this apologetic, very apologetic message the next morning on my voicemail, apologizing for the, you know, the discomforting me because she regrettably had to go home again. She'd driven about as far as Peterborough, and the daughter was making certain, she was nonverbal, by the way, and she was making certain sounds, and the mom, of course, can tell. And initially, she thought that the girl was just sort of sleepy and grumpy or whatever, disgruntled, because she had been eager to go to Variety Village the Thursday before this trip. And of course, at Variety Village, they have a pool. And so Mom figured out by the time she got to Peterborough, that no, there was something wrong. So she turned around, went to hospital. And sure enough, what had happened is the girl, the one arm that did some work, was fractured. And what must have happened, she presumed, was that when the girl was taken out of the pool, put on a towel, dried off, rolled over, she must have rolled on her arm and fractured it. So here she is. Here she is, apologizing to me for missing her appointment. And of course, obviously, I'm the one who. Anyway, you know, clients do miss appointments, and generally speaking, we figure they have a pretty damn good reason. So anyway, James says, sorry to digress, but James says, we took the stuff in, and due to our extreme life and health issues, we did not realize it wasn't processed. Coincidentally, there was a provincial increase at the same time, which we misinterpreted as the diet allowance. So it sounds to me like maybe it was done in November, you know. I'm now trying to get the missed 2 years given to us retroactively. I've submitted a recent doctor's note indicating that she did fill the forms out 2 years ago. Any suggestions on how to accomplish this? Well,
I have a good suggestion on how to start with this.
Yeah, go ahead.
Firstly, I would recommend that you make a formal request in writing. And if the worker tries to call you and give you an answer verbally, you need to make sure that you get a written decision letter. And that would be your first step, is making sure that you do the request, give the proper paperwork, put the doctor's letters, and then don't let the worker answer you verbally. You need to get a written request and then a written decision letter. Even if it's not in your favor, get that decision letter. And then if it doesn't work out for you, then I would suggest, you know, contacting your local legal community clinic, or you could contact myself, and we'd be happy to guide you on how to accomplish what you're trying to do here.
I'm looking for some more questions here. I see Susan says yes. Hi, Susan.
A lot of people
Here's
will
a good
say,
one. Can you claim both the caregiver tax credit and the disability tax credit? This is a common misconception or confusion. The disability credit is the disability credit of the child, adult child. And it is transferred to the parent because the child does not pay taxes, income tax. They receive ODSP, social benefits are not taxable. So the credit is a dandy thing as far as getting registered disability savings plans and so on, but it doesn't actually do any good for the child. So it is transferred to one of the tax-paying parents. Crystal, when I made a few comments, perhaps you could comment on the letters to the doctors and the transferability issues and so on. So the credit is transferred from the child to the parent. It's used on the parent's tax return. The parent pays income tax. It's used on line 318, which is the credit transferred from a family member. And of course, increasingly, as parents get older, we find that the parent has disabilities. You know, you got to keep your eyes open so that when they're leaving the office, you see they're using a cane. But the credit yourself, if you qualified it yourself, would be on line 316 of your tax return. Transferred from a family member is 318, and transferred from a spouse is 324. So it's transferred from the child to the parent, and it is transferable if the family member could be a sister, brother, aunt, uncle, and so on. And the child doesn't have to live with you. You have to help them to some degree with the necessities of life: food, shelter, clothing. And of course, if the child's in a supported living environment, you're not helping with shelter, typically. You're not paying rent. But you are, of course, helping with food and clothing, certainly clothing. And in a lot of cases, many cases, the child comes home a number of weekends or periods of time a year. And when the child is at home, you, of course, feed them, take care of them, give them clothing if needed. And so the credits are transferable if you help to some extent with the necessities of life. And no, you don't need receipts. The caregiver credit is the credit of the caregiver, the parent. So yes, you definitely use both. And the caregiver credit is presently used on line 307. And we have to be careful to check because there are conflicts with couple of earlier 300 lines. So 300 lines, 300 to 350 are all tax credit lines, and they reduce taxes. And there is a conflict with an earlier line if it's used, which is often used. So we have to pay attention to these things and reverse the earlier line and then apply the correct line. And the wonderful thing here, and I'm going to go back a couple of slides here because there's been a wonderful change. You see here where there's 362,000 people on ODSP. Well, with respect to the caregiver credit, until 2017, the criteria was that you had to be a caregiver, and that was a rather not well-described definition. But I think most people know if they're a caregiver. And it only applied if the child was over 18, had a disability, and lived with you. And just for those of you who happen to be living with your parent who has accessibility issues, doesn't apply to you because the parent has to live with you, not you with them, which is obviously stupid. But anyway, with respect to the children, the adult children over 18, until 2017, only the families of the 46,871 room and boarders could use the caregiver credit because you had to reside with them. And then in 2017, the reside with criteria was removed. So now, potentially, perhaps not all, but in likelihood, almost all, of the 362,000 families, all would qualify for the caregiver credit. And the credit presently reduces taxes for the tax-paying parent by $1,000 a year. So this means that it's gone from potentially 46,000 families at $1,000 a year, which is a fair number, going back potentially for a 10-year period, which is still available, to 362,000 families starting in 2017, and nobody knows this. Who would know? So you certainly can use the disability credit because it's the child's credit transferred to the parent or whomever is paying taxes and helping with necessities, and also the caregiver credit. And you can do it even if the child does not live with you as of 2017. The 10-year backfiling for the disability credit is approximately $16,000. And this also gives you the full backfiling period for the RDSP, which means that if the child doesn't have an RDSP and the disability credit is backfiled or applicable, not even backfiled, but approved and applicable after filing the T2201 for 10 years or longer, then when the child sets up the RDSP, they automatically get the $1,000 a year bond for the last 10 years, even if you make no contribution to the RDSP. And then, of course, if you do contribute, you put $1,500 a year in, you get a further $3,500. And of course, there's a retroactive 10-year period now, which if you receive $16,000 plus, for example, about $8,000, if the child was 28, you'd get a 10-year period for the caregiver credit, which is approximately $8,000. Well, you all of a sudden have a few dollars that you could use to make retroactive contributions to the RDSP to pick up the grants for the previous 10 years. Now, we'd be happy to advise you on, from practical experience, what you should do, whether you should bother with the retro payments or whether you should just pay $1,500 a year for the next 20 years going forward because you'll get all the grants and bonds anyway. But you can see that if you get this credit approved 10 years retroactively, you automatically pick up $10,000 in $1,000 a year bonds, which is pretty handy. Crystal, do you have any comments about the disability and caregiver tax credits?
No, I think you covered it all.
Okay.
I don't think I can hear you, Ken.
Yeah, test.
Okay. There was one question here on whether or not one parent can claim the disability tax credit while the other parent claims the caregiver credit. And I mean, the short answer for that is yes. We also find some parents who alternate years. One parent will take all the even years and use the credits, and then the other parent will take all the odd years and use the credits. And we find that that's an easier way to divvy up and make it fair.
Okay. I see Susan has a question here. She says, my sons live on their own with supports. They claim the disability tax credit, and this may be because their taxes are filed by whatever support organization helps them. Well, normally, of course, if the child's income is solely ODSP, it's of no use to them. They don't pay taxes. So, of course, obviously, over the years, I've seen situations where the disability credit was put onto the child's own return. But that doesn't mean that it can't then still, Susan, be transferred to you. The fact that they've used it or applied it, any unused portion, which is the whole of it, if they don't pay taxes, can still be transferred to you, and it's not too late, except it's a 10-year window. And then the caregiver credit, well, as of 2017, you're right, they live on their own with supports. So as of 2017, you can use the caregiver credit. Prior to that, during that 10-year period, if in those years they lived with you, you could still use the caregiver credit for those years in which they resided with you. And now, as of 2017, you can use the caregiver credit even though they don't reside with you.
I also had a question today where the child works part-time and pays a very small amount of taxes. And they asked me, how does this work in our family? And the answer is firstly, CRA will always apply the tax credit to the child, and then the remainder can be transferred to the parent.
I see Janice has a question. I'll just reiterate this so it's clear to people. If the lease amount is $550 that we say, let's say we charge, why is that not taxable? Well, it's because you're not in pursuit of profit. And of course, every client that we deal with, we send the CRA information about this. And if you're not in pursuit, excuse me, if you're not in pursuit of profit, you can't write off expenses either. So you're not supposed to declare it because you're not in pursuit of profit. And this would be the same thing if you had someone other than your child living with you. If you had a friend or someone off the street or a relative, and they're making some contribution towards shelter costs, but you're not in pursuit of profit. You also don't get to write off expenses that are related to that. Now, obviously over the years, I've spoken with families, and some accountant has advised them that they have to declare it as income, which is not true, but it's okay because given that they have a mortgage and taxes and maintenance and insurance and all that stuff, they've taken off a proportional amount of those expenses, and which happens very happily to coincide with the amount of the rent, quote unquote. And so of course it's a wash and there's no difference. But CRA and income tax rules and the principal residence capital gains exemption and these matters are becoming more and more stringent all the time. And probably won't be an issue because you haven't altered your house. But then of course, we do have families who do alter their house, and they have self-contained dwelling units in the basement. Well, you want to preserve the principal residence qualification for your whole residence, because when you sell that property or you die and your estate sells that property, you want the whole of it to qualify for the whole period that you've owned it as a principal residence, so that the capital gains tax is non-taxable. And speaking as a lawyer who deals with tax matters, some modest passing interest in these things, if you're declaring rent, well, what portion of that property is a rental property and which is not your principal residence? What percentage of it? And when you die, what will your estate do? How will they satisfy themselves that there is no tax due? And will they err on the side of caution? And will they decide that 20% of that property, just to be safe, and the value when they sell the property should be declared as a non-principal residence and taxes should be paid? It's completely unnecessary if you just follow the rules and don't declare the rent. I love this one. Anonymous attendee. Is there a list of additional benefits available so we can determine if any apply to us? You mean, what are you asking? If there's freely available free information about what can be available, and if you ask the ODSP staff, will they tell you what it is that your child might benefit from? I don't know, Crystal. Do you think that's likely to be available? Do you think that that would be likely provided by the staff at the local office?
Definitely not. We seen a case that actually went through court, and something as simple like incontinence supplies was never ever assessed or paid to our client for 20 years. The caseworker never followed up with the client, never asked, what the client needed. And then 20 years later, we end up in court on a different matter, and the judge actually pretty much reamed out the ODSP caseworker for not doing these things. It's not going to happen.
Yeah. Here's an interesting one, Crystal. ODSP will only cover about $100 for new glasses, but the prescription will cost about $475, which sounds like a pretty normal amount. Where'd it go?
Oops.
I did see that question. The answer to that one is the assistive devices program.
Yeah, that's what I would think. Is there a way to get the rest covered? Okay. Well, I mean, if ODSP told you that they'll only pay $100, did they not tell you about the assistive devices program? No. Let's see here.
I saw another question earlier about ACSD and whether or not that's ODSP for people who are under the age of 18.
Oh, yeah.
And the answer to that is yes, except for the assistive devices program, you actually have to substantiate what it is that you're asking for money for. So if it's respite, there's a set amount for how much they're willing to pay for respite. But if you're doing extra laundry or buying extra clothing, or you need to fix holes in the walls, or anything that you're dealing with on a regular basis that costs more money than it would if you didn't have a child with a disability in the home, then they're going to help you up to about $500 a month. And those ACSD files also come with drug coverage and dental coverage.
There's one here from Kim. Can it be a step parent that can use the tax credit? Well, that step parent, that can apply. That can be transferred to, rather than your mother, to your stepfather. But they have to be filing taxes as common law or be married. Canada Revenue declined the application for DTC in 2017-18 before she qualified for RDSP. So I will reapply, but not sure if it was ineligible. They're two completely different things. The test for ODSP is that a person can't function in a competitive workplace or in the community or handle personal care. And the test for the disability credit, and that's a provincial ODSP test, which is a lower test than the federal Canada Revenue tax approval, which is that the child, it's a much higher test, that they can't function in the community or they can't handle personal care. I'm sorry, those are ODSP. That they can't function in the community can be one of the disability credit criteria. But it's that they are markedly restricted, can't set and keep goals, take substantially longer to do things. It's a higher test. So normally it's the case that if the child is approved for the disability credit, they should be approved for ODSP, but not the other way around. Lots of people are on ODSP who don't qualify for the disability tax credit. It's 8 o'clock. Let's just see how many more questions we should take here. Susan again here. If a person is working a few hours a week, they would claim the disability credit. Well, Susan, they could certainly claim it. Go ahead and put it on their line 316. Put it on their credit. But if they're working a few hours a week, and if they have a personal tax credit of $12,000, which everyone does, and if they then have a disability credit of $8,400 in addition, then they would have to make $12,000 and fully use the personal credit before they needed to use any of the $8,400 disability credit, and a few hours a week will not do that. If they work 35 hours, 1,800 hours a year at, say, $15 an hour, that's approximately $25,000. So if you have that kind of category, you can do those numbers. If the child is working half time, 17 and a half hours at $15 an hour, that's approximately $12,000. So they would then fully use the personal credit, but they wouldn't yet be touching on the disability credit themselves. And even if they did use some small portion of it, the unused portion can be transferred to you. Susan, I would have thought we've discussed this. Why did we not discuss this, Susan? What's the problem here? You should know this stuff, and I should have told you. Sue Robinson, do you have anyone on staff that can help with tax filings? I usually do my own, but these lines 300 to 350 are confusing me. Well, we don't actually do tax filings, but what we do is we do the adjustments for the missed disability and caregiver credits. Now, if you wish, I'll certainly be able to refer you to somebody to adequately do your taxes. And if you haven't used certain credits, we'll be happy to adjust them. April, a company did my disability credit and did not make me aware of the RDSP, and now I'm 52. Can anything be done? No. You could set one up, but you can only make contributions and get grants and bonds until you're 49. So when this work was done, this company that did your disability credit, were you over 49? Was it when you were 50 or older? Because, you know, I'm not trying to make excuses for them. But if that was the case, well, there would be no sense to mention it in most cases because you would not get grants and bonds. Oh, this is a good one. We're digressing a bit here. We'll go on, run on for what, another 10 to 15 minutes, Crystal? Once you're at 65, can you still get ODSP? Well, at 65, you apply for and receive old age security and guaranteed income supplements. But until you do that, you don't get cut off ODSP. You still continue to receive it until you do get ODSP, OAS, GIS. And of course, you'd want to do this because the maximum of ODSP is about 14,000 a year, 1169 times 12. And the maximum OAS, GIS is about 18,000. So, Crystal, do you have any comments about the RDSPs or tax credits? Or?
No, I think you've covered a lot of information. I'm just reading some questions here, sorry. I see one question that a lease would need to be drawn up. Does the child need to have the capacity to sign and enter into the agreement?
I see.
That's a loaded question, and I think that you guys should contact our office and we can discuss some of the options that might be available to you in that department.
Robin says, do you automatically get the caregiver credit if you have a T2201 on file? No. Because obviously the child could be under 18 and not qualify for the caregiver. Or prior to 2017, they could not reside with you and therefore you don't qualify for the caregiver credit. So you can see the disability credit and the caregiver are completely separate. Disability credit is the child's credit transferred to the tax-paying parent, and the caregiver credit is the parent's credit because they are the caregiver.
I also think that it should be mentioned if they are under the age of 18 and you apply for and get approved for the disability tax credit, then it also raises your child tax credit because you get an extra portion that's the disability child tax credit. So in addition to saving you some tax money and recapturing the last 10 years, you're also eligible for an additional amount each month when your child tax benefit is paid.
Here's an interesting one. I'll see if I can unpack this from Reiner. What if if a child is on ODSP and in long-term care and their grandparent is also eligible for the disability credit, yet living alone, but needing supports, pretty common. Can the disability credit and caregiver supports be claimed cumulatively by the caregiver in the middle? Yes. Now, with respect to the child who's in long-term care, as of 2017, you can use the caregiver credit. Prior to that, you couldn't. The disability credit can be used, transferred from the child. The disability credit must firstly be used by the grandparent if they pay taxes. And then any balance can be transferred to the caregiving son. And with respect to the caregiver credit for the grandparent, your father, your parent, the caregiver tax credit is income tested and is eroded if their income is greater than, I think, $22,000. I'd have to double check that number. Used to be 17, but they changed things in 2017. So you can see that the child in long-term care clearly is only on ODSP, and therefore their income of $14,000 is less than the initial threshold that starts to erode the caregiver credit for you, the father.
And I think at that question, it should also be mentioned that you need to be, in order to be eligible for the transfer, you need to provide food, shelter, or clothing. And it is an or, it's not all of the above. And with long-term care, a lot of the times they do provide food and shelter. So you need to be, you know, make sure that you're providing clothing on a regular basis so that you can use that credit.
Okay. There's a recent question here from Cindy. Sorry, I missed the information about the increase. What is the eligibility for this? Well, the child has to be over 18 on ODSP, obviously. And it's very helpful if they can shop or cook. But other than that, you know, like give us a ring and we'll tell you more. But it's you know, it depends on the child. I mean, if the child is on the one hand completely incapacitated, well then obviously they can't shop and cook. So, you know, the odds are unlikely that on the face of it that we can get the increase. And on the other side, and this is, you know, humorous to us, it's not really that funny, is if you go to a social benefit tribunal for these families where they're providing 24/7 care, I won't go into all the detail, but on a tribunal appeal, we find that the higher amount is granted because the room and board is really just designed to give a room plus food. And of course, if you're providing 24/7 care for this child, that's far more than room and board. You know, this just isn't a rooming house, you know, that provides food. This is much, much more than that. And so we find that the social benefit tribunal officers, the adjudicators, agree that there's only two amounts. And if the category or the circumstances of that child are clearly not just room and board, and there's only two categories of benefit, then they must not be in the room and board category. They must be in the other category, and so they get the higher amount. Now, Crystal, you've dealt with the tribunal more than I have directly, but that's my understanding of how that works.
Yeah, and well, with that answer, it also comes down to the amount of support that's given by the parents and the love that they feel at home versus what happens when you're in a group home situation and they're not loved like they are by their parents, but the group home gets the higher amount and the parents are not. And if the parents were to throw their hands up in the air and say, I'm done, my child's going to supervised living, they would be eligible for the higher amount. And it costs the province a lot more than the additional amount of the $273 that you're actually requesting.
Yeah.
Putting somebody in supervised living costs about $200,000 a year. Meanwhile, we're just asking for $200 a month.
Question here from Monica. The winter roads made me late for the beginning. Could you put up the slides and so on? Well, I'll reiterate that everyone who is registered, not just those who take part here, because we have 145 now, so I'll wrap it up in a few minutes. The 465 that registered will all receive the PowerPoint slides as well as the YouTube video link. And feel free to pass it on to others. You know, the deal here, frankly, guys, is that we're happy to give you this free information. We're pleased to assist you and to charge our reasonable fees and all those good things. But, you know, in return for the free information, what I'd like you to give that free information to all the families who obviously aren't here. I mean, there's 465 registered. I'll know tomorrow how many of them have a child at home. I haven't checked, you know, today. I'll know how many of them have a child at home. It'll be something like 15 or 20% of the 465. Well, if it's 20%, that's what, 80 to 100, something like that. And as we can see here, oops. As we can see here, there's 46,000 who are in that category, who have a child at home, who aren't here. So when you're taking part in the various groups and activities that you take part in with your child, I'd like you to spread the word. That's the deal. Crystal, do you have any closing comments? Do you have any questions you see you'd like to especially answer there?
No, I think we've covered all of the questions that stand out to me anyway. But you're more than welcome to call us or email us anytime if you can think of any questions after this is over. And we'll be happy to, listen to your fact situation and give you honest legal advice.
Yeah. Oh, this is a final question. It's short, so I'll just answer this. Alicia MacArthur, do you have to have the disability tax credit certificate? She says filled out, but I think she means approved. Oh, and approved to claim the caregiver credit. No, because they're completely separate. It is true that if the disability credit is approved and being used on your return, then if you do use line 307 and schedule 5 to adjust the caregiver credit make use of and adjust the caregiver credit on your return, then if the disability credit is approved, you don't need to provide further verification that the child has a disability. The Schedule 5 deals with that. Who is the person? What's the nature of the disability? How old are they? What's their income? And a few other things. If the child is not approved for the disability credit, they don't have to be approved for the caregiver credit the way you would for the disability credit, but you do have to document it. You have to support it. You need a letter from a doctor. You need a report of some sort documenting the fact that the child has a certain disability, and it's not just your say-so. And that's about it. So I think we've done a crackerjack job. There's 135 people still taking part. Questions. Says here the questions have ended at 11:02 p.m. Don't know about that part. But I don't see any more questions popping up here. Are we still active? Karen, are we still active?
Yeah, you're still active.
Okay, so it's just that the questions have ceased. So I think that's a pretty good time to stop. Thank you everyone for taking part. I hope it wasn't a complete waste of your time. And if you have questions, please do feel free to send them in. Email is best, Karen@kpopelaw.ca, and she'll follow up from there with delegating them to the proper people to have answers sent back to you. And that's all I have to say. Thank you and good night. Crystal, you want to say thank you and good night?
Thank you for attending and good night.